December 12th, 2023. Today I had a leg one, leg two measured move. So leg one from bar three to essentially bar 20 high. Then we had a pullback, essentially a wedge, and then started at 33, the second leg up, and we got a swing up to exactly almost that high. It's pretty hard to buy above 33 and sit through all of this. So, a lot of times when you're getting the second leg up, it'll give a swing entry, but it's really difficult to sit through the whole swing, especially when you're getting bars like this. We also, a lot of times you get a strong pair of bear bars or a strong pair of bull bars on the open, and then you end up getting a trend in the other direction. A lot of times when you get a pair of bars in either direction, you end up getting trends. I have some examples. Parables. But just in general, just looking, we have trading ranges. We have 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 examples of trading ranges. 3, 6, 9, 10 examples of bull trends or bear trends. And, the bull trend examples have pairs of bear bars and pairs of bull bars in them. So it could be either. And then the bear trends, 1, 2, 3, 4, 5, 6, 7, 8. So we have 18 examples of trends and 17 examples of trading ranges. So I suppose you could say with the examples I have, 50-50 chance to get a trend after 1 and 2. So strong bear bar on 1, strong bear bar on 2, but you probably don't want to be selling all the way down here. 2 isn't a very big bar. You'd rather see a much larger bar if you're going to sell that low. That's why you get bad follow through on 3. And a lot of traders who sold to close at 2 were hoping for a big collapse down. So they're hoping for another bar like 1 on 3. And when they don't get it on 3, they exit at the market. And that's what's causing 4. 4 closed stronger than I was expecting it to. I thought that we were going to go above here, but I thought we were going to find sellers above somewhere. Even with 4, I still thought there would probably be sellers above since this was probably a trading range. And we got a doji follow through bar on 4, which is a reminder to the bears or to the bulls that this is still a trading range. And so, more unclear up here and you have to be quick to get out. 6, a bull bar, but not a super strong close. Follow through for the bulls on 7. I thought 7 was kind of surprising in that it closed above the 1 high and it closed decently strong. I was expecting the bulls who bought above 6 to be disappointed. And I don't know if this is exactly relevant, but I was noting that during as 4 was going up, I was thinking about how high above bears would probably want to sell. And I wrote down that I thought bears would probably sell 2.5 points and 5 points above. So the high of this is 4, so 5 points above, right? 4665.75. So 4670.75. So right here. And then 2.5 points above would be 68.25. And what's the midpoint? Right here. And you can see 7 traded 1 tick below that midpoint. So it's possible that bears sold 2.5 points above. We're disappointed in this close and we're able to sell more higher. And hoping to get, essentially when they saw the doji, hoping to get more disappointing follow through. And then when they saw 6, they were just pretty much done with the trade after these bull closes. And so when it traded back down on 7, they exited around break even and then we rallied. So I think, a lot of bears exiting is probably part of what's causing 7 to close so strong. Follow through for the bulls on 8, I think is a big question. Are bears who sold above 1 going to make money? And that could determine whether this is a trading range day or a trend day. And it's important that if you sold above 1, sold more 2-3 points higher, you were able to make money on 9. So it may not be as strong as bulls want, but still good bull close, pullback, a couple good bull closes, pullback. Essentially a wedge to bar 12 with 10 and 11 not being all that strong for the bulls. It's still always in long, but not all that great. And then you get bar 12. I think bulls exit below 12. The bears sell. It's a pretty tight bull channel that you're trading against, so I don't really want to do that. Also, if you're going to sell below 12, you want the market to just race down immediately. And 12 didn't trigger until about 4 minutes into the bar. So I don't really think it's all that great of a sell below 12. It is a failed breakout at yesterday's high, though. It's also notable that if you bought above 7, I thought 7 was a surprise bar, so a reasonable buy. If you bought above 7, exactly a 5-point scalp is the new high on the day. So I thought that was interesting and important. So essentially the algorithm is setting up good math to buy above 7. But they're not, 21 tick trap on 12. Bulls probably exit below 12. 13 tests up to the 11 close. So anyone who bought the close of 11 disappointed 12. Some of them are getting out 13, which is causing the tail. 14 a bull bar, but probably sellers above 12. I thought, we had 3-bar tight trading range here, and obviously a couple failed breakouts of yesterday's high. And and then you get a big bar like 18. But if you think about it, we're pretty deep into this bull trend, right? We're 14, 15 bars into this bull trend, and then you just had a 3-bar tight trading range, and now you're getting a breakout on 18. So what's more likely, that bulls are going to just buy this close and buy this close and we're going to rally, or that we're probably going to get some sort of trading range? I think we're probably going to get some sort of trading range. So bad follow through on 19. It's a bull bar, but if you bought above 18, you wanted another bar that looked like 18 to really convince the bulls that we were going to get strong follow through and make this not seem like just kind of a parabolic breakout of the top of the channel, which is what it was. So really not all that great to be buying up here. I guess if you're always in and you got out, maybe you have to buy, but I would buy small and look to add on if we continue up strongly. 20, disappointing bear bar closing near its low, probably have to exit. 21, not a lot of sellers below 20. And we essentially got, we got 2 legs down, 1 pullback 2. Bears were hoping this was a wedge top. So it was possible 12 was a wedge, right? 1 pullback, 2 pullback 3, but not a very good sell below 12. Like I said, it was possible that we got another wedge on 20, but 1 pullback 2 looks more like a 2-legged correction to the bottom of the channel. And then big bull bar closing near its high on 23, but just looks like a vacuum test of the close of 19. Bulls who bought 19 and scaled in did a reasonable thing, so they should be able to go to their first entry at break even. Disappointment on 24 because the bulls, bulls were selling up here, not buying. A couple of inside bars, tight trading range, and bull bar closing near its high on 28, but you're buying the top of a tight trading range. So and you're buying, the top of a 3-bar tight trading range and the top of an overall trading range. So it's really not very good. You want to see consecutive bull bars if you're going to buy. And it's a failed breakout above the II. So we got a failed breakout below on 27 and then a failed breakout above on 28. So the failure failed, and then you get 29. Probably not the best sell. Limit order, stop order bears haven't made any money yet today. There's really no spot where you could have made money as a stop order bear today. Selling below anything, you sold below 1, you made like a point. It's not reasonable with how much you're risking. You couldn't make anything here. You couldn't really make anything here or here. So, if stop order bears really haven't made any money yet today, there's no reason to try and be the first one to do so. Bad follow through on 30, inside bar 31. Follow through for the bears on 32, but you probably need one more bar to make it always in short. So really not a great sell. And your signal bar is 31, and so we're probably going to get back to that low. And this is the first bar breaking out of the tight trading range. And, since it's the first time bears are making money, they're probably going to scalp. And if it's going to be a swing, you're going to get, this is probably going to be the target, right? So if 33 is a big bear bar closing near its low, all the traders are probably going to look down here. But this is tight enough that, we're probably going to have to go sideways to down, even if we do go down. So not that great, not surprising, bad follow through on 33. Bears get trapped. You can probably buy above 33 for a swing. Follow through 34, 35, but not the best follow through. If you bought above 33, you're kind of hoping for steeper follow through. And, this pullback just doesn't seem long enough. So if you threw a stop below here, I think 33 is one of those trades where you buy, you put a stop below here, and you just, maybe set, something of a leg 2 measured move profit target, like up here. And then, go take a Walmart trade, as Al says, and just go away for a couple hours. Because that buying above here, you're probably going to have to sit through a deep pullback. But it's also reasonable to do. You're going to have to sit through deep pullbacks. Like I said, this was a wedge pullback, 1, pullback 2, pullback 3. But I don't think it was, I don't think it necessarily was long enough. I thought we needed to go sideways for maybe like 20 or 30 bars and then get a second leg up, as, we do a lot of the times. 30, so bad follow through 38, a lot of bulls exit below 38, 39, and you get 40 closing near its low. It's a bear bar, but it's, you need one more good bear bar, I think, to make it always in short. I don't want to sell right on the moving average, but the problem with selling below 40, or for the close of 41, is your stop has to go above 37. So while we'll probably get a lower high, what's your target if you're selling here? You probably want to get to the open of the day. Well, your risk reward is pretty much exactly 1-to-1. It's suppose it's, if your stop is 1 tick above, and then you're 1 tick below. This is a bit messy, but it's something like this. And your stop is, your risk to reward is pretty much exactly 1-to-1. And what are the odds that we're going to race straight down here without pulling back? Not very good. So that's why when you get bad follow through on 42, when the tail happens on 43, traders just immediately buy back their shorts. And that's what causes the racing up on 43. 43 tests the close of 37, which was, not a good buy the close bar, but technically reasonable, I suppose. And those traders who bought there scaled and lower and will make money. 2-legged correction, 44, 45, pullback 46, so 2 legs down. But again, stop order bears really not making any money. Limit order bears have been making money today, but stop order bears haven't been. I don't see any reason to be taking these sells. 48, it's a high 2 buy after a spike, so pullback, potential channel coming, but not all that great. I think you could argue that the whole day was a spike, a pullback, and then a channel, and this was the channel, and then we got a parabolic breakout at the end, essentially going for the leg 2 measured move. And in here, you just probably got to recognize it's a tight bull channel and buy at the market at some point. And then you get big follow through on 67 and 68, but you're super deep in a bull channel, right? You're like 55, 60 bars at least into this bull trend overall. So what's more likely, this is exhaustion or that this is going to be a measuring gap? It's more likely that this is exhaustion. So traders more likely to take profits up here and look to get out below pretty much any bar, but bulls buy the close of 70, not letting it trigger. And I think most bulls exit below 72 or 73 at the latest. Stop orders, I thought 7 was probably fine. 33 was probably fine. And then somewhere in here by the market. And on the daily chart, we keep getting follow through for the bulls. So that's good for the bulls. Let me use the SPY. Keep getting follow through for the bulls. It's good for the bulls, but this is one of the strongest breakouts we've gotten since way down here. So I think kind of this is starting to look similar to what we got at the end of the day today. We might get more follow through to the upside and continuous bull bars. And, this could break out into a bull trend. It's trying to get a breakout above what was essentially a wedge. But I'm not so sure that we're going to get it. I think this is going to end up being more exhaustion than a measuring gap. Yeah.